Welcome back to the deep dive. Okay, so today we are tackling a really big one. WAAREE Energy's Limited, massive player, right? Solar green energy manufacturing. And we've got these two, well, seemingly contradictory sources that paint a fascinating picture.
Yeah, it really is interesting. On the one hand, you have this absolutely knockout Q2 earnings report for FY26, record numbers, really aggressive strategy outlined.
It's stellar stuff. But
But
then,
then you look at a recent technical analysis of their stock chart, and it kind of suggests maybe the market's taking a pause, a bit of caution creeping in.
right. So that's our mission for you today. We want to give you the shortcut, distill this down. What's the real operational strength here? What's this huge bet they're making on the green transition? And critically, what's the stock price actually telling us about momentum right now? Okay, let's unpack this. Historic performance versus maybe some current market hesitation.
It is a classic situation, isn't it? Fundamentals versus short-term sentiment. And you really have to start with the fundamentals, the raw financial power they showed in Q2 and the first half of FY26. That's the period ending September 30th, 2025.
Okay, let's dive straight into those numbers because some of them really leap off the page. Can you walk us through the key metrics? What are we seeing?
Well, first, top line. Total income hit 6,227 crore. Now remember, CR is crore, 10 million rupees. That income figure alone is up a massive 70% compared to the same quarter last year-on-year growth.
70% year-on-year growth. Wow.
Yeah, huge. But where it gets even more impressive, I think, is profitability. Look at EBITDA. That's earnings before interest, taxes, depreciation, amortization. That jumped 155% year-on-year to 1,567 crore. And maybe even more telling is the margin.
The margin, right, because revenue is one thing, but keeping it is another.
Exactly. Their EBITDA margin was 25.2%. Now, in this industry, heavy manufacturing, keeping a margin like that, it shows real pricing power, real operational control. It's strong.
Incredibly strong. A 25.2% margin is definitely something. What about the actual bottom line profit?
Profit after tax, yeah. That surged 134% year-on-year, came in at 878 crore. So it confirms they're not just growing the top line, they're converting it very efficiently into actual profit, shareholder value.
Okay, so financially, just a juggernaut right now. Let's shift gears slightly to operational scale. Their current size is already huge, but it's the future visibility that seems, well, almost unbelievable.
It really is. I mean, currently they're operating with module capacity around 18.7 gigawatts, GW, that's a massive unit of power, right? And 5.4 gigawatt of cell capacity. Just in Q2, they cranked out 2.6 gigawatt of modules. That production number itself is up 37% from last year.
And here's where it gets really interesting for me, the order book, that future pipeline. Because that's the lifeblood, isn't it? Especially in a capital-heavy business like this.
Absolutely crucial. Their confirmed order book right now stands at roughly 47,000 crore. Just think about that number. That translates to about 24 gigawatt of capacity they need to deliver.
24 gigawatts already locked in.
Locked in. That gives them a very clear revenue runway for several years. And it's global demand, too. About 59.5% of that book is for overseas clients. Shows their international standing.
Okay, so the current book is massive, but the pipeline.
The pipeline. That's the potential orders they're chasing. They reported that pipeline is over 100 gigalub. Now, that's not confirmed yet. It's potential. But it signals just phenomenal long-term demand they see coming.
100 gigawatts. They're positioned perfectly, it seems, for this huge global solar build-out that everyone's projecting.
Exactly. It looks like they could be busy just making modules for the next decade.
Right.
And this is the next crucial piece. They're clearly not satisfied with just being a module maker.
Right. That brings us to the strategy piece. These huge investments they're planning. It looks like they want to capture the whole green energy ecosystem, not just solar panels.
Precisely. That's the strategic roadmap. They've laid out plans for total capital expenditure CAPEX of over 25,000 crore. That's not just keeping the lights on. That's a fundamental transformation.
Yeah.
They're shifting from, primarily making one thing to becoming this integrated green energy powerhouse.
And we have some really specific details on where that money's going, big approvals right after this quarter ended.
We do. In October 2025, just after Q2, they approved another big chunk of CAPEX, about 8,175 crore. And the vast majority of that, around 8,000 crore, is earmarked for battery energy storage systems, BESS.
Okay, BESS. Can you quickly explain for everyone why that's so critical and what GW means here?
Sure. So solar power is great, but the sun doesn't shine all the time, right? BESS is basically the giant batteries needed to store that solar energy when it's generated and then release it when it's needed, like at night, or to stabilize the grid. GWH, gigawatt hours, that measures the energy storage capacity, how much energy these batteries can hold. And WAAREE is planning to expand their BES capacity from 3.5 gigawatts currently to a huge 20 gigawatt-hours.
20 GWH, that's a massive jump.
It's enormous, and it ties directly into India's national goals. India is aiming for something like 236 GWH of cumulative BES capacity by 2032. So WAAREE is making a direct, huge play on that national infrastructure build-out.
That feels like a fundamental shift, though, moving from high-volume module manufacturing, which they're clearly very good at, to building giant batteries and grid infrastructure. That sounds like a completely different skill set, almost a different company. Is that a risk?
Oh, it's absolutely a risk. A calculated one based on where they see the market going. It's a high-stakes bet, no doubt. Yeah. And they seem to be aiming for a future where if you need any major component for the energy transition, you get it from them.
So it's not just BOS.
No, beyond BSS, they're also pushing hard into green hydrogen. They're expanding their electrolyzer capacity. That's what makes green hydrogen from 300 megawatts to 1 gigawatt. And boosting inverter capacity, too, from 3 GW, 3 GW. And look at the acquisitions they made recently.
Right, the transformers and meters.
Exactly. They bought majority stakes in Cotson's transformers and Racemosa energy meters. Those are the bits you need after the energy is made and stored. The delivery infrastructure. Plus, they bought Meyer Burger's U.S. assets, securing a bigger foothold in the really important U.S. market.
Okay, so connect this massive spending spree, over 25,000 crore planned, back to the big picture. Why take such a huge gamble?
Well, the market projections kind of justify the ambition, or at least explain it. India is aiming for 280 gigawatt of solar capacity by 2030. That's more than double what they have now.
Huge domestic growth.
In the U.S. market, projections there are around 500 gigawatt of solar by 2030. These are just colossal market tailwinds driving demand.
So they see this wave coming and want to ride it across the board.
That seems to be the strategy. It's fascinating, really. They want to control the whole value chain. Polysilicon, ingots, wafers, cells, modules.
Yeah.
Okay, that's the solar part. But then also green hydrogen, inverters, transformers, and the big one, energy storage. They want maximum wallet share from this whole green build-out.
Okay, so let's summarize that part. Fundamentals are absolutely roaring. Record Q2 earnings, profits soaring, huge order book providing visibility, and this incredibly ambitious, frankly massive strategic plan to dominate the whole green energy supply chain. But the market isn't always logical, is it? Let's pivot now. Let's look at that cold, hard stock chart from November 2025. What's it telling us about how investors feel right now?
Yeah, the chart definitely tells a different story, or at least a more nuanced one. It looks like an athlete who sprinted really hard and is now just pausing, taking a breather. Remember that huge rally the stock had?
Right.
March to May 2025, it just went almost vertical.
Oh yeah, parabolic move.
Exactly. And since that peak, it's mostly been consolidating, trading sideways, really, through summer and early autumn. Right now, the price is hovering around 3,420. But if you zoom in on the recent price action, the candlesticks, you see this pattern pretty clearly. Lower highs.
Lower highs. Okay, explain what that means technically.
It's a classic sign of short-term momentum loss. It suggests that each time the price tries to rally, sellers step in a bit earlier, or buyers aren't quite as aggressive. So the upward pushes are getting weaker. Profit takers, maybe.
So conviction might be fading a little despite all this incredible news about 134% profit growth and the huge expansion plans. That seems like a disconnect.
It does seem like a disconnect. And the technical indicators, they kind of quantify that feeling of fatigue, maybe. We look closely at the RSI, Relative Strength Index, usually over 14 periods.
Right, the RSI. What exactly is that measuring for us?
It's a momentum oscillator.
Yeah.
Basically measures the speed and change of price movements on a scale from 0 to 100. Below 30 is usually considered oversold, meaning the selling might be overdone. Above 70 is overbought. And right now, the RSI is sitting at 38.19.
38, so pretty low, getting close to that oversold territory.
Exactly. It signals that buying pressure has weakened quite a bit, at least in the very short term. And another piece of the puzzle is volume.
Trading volume, right? What's that telling us?
Well, we saw huge spikes in volume back during that big rally in April-May and another bump in September. But more recently, volume has been declining during this consolidation.
Which means
Lower volume during consolidation often suggests reduced conviction. The market isn't strongly committing capital one way or the other. It's kind of waiting for a clearer signal, maybe.
Okay, so if you're watching this chart, maybe thinking about risk, what are the key levels? Where's the support? Where's the resistance?
Good question. You need clear levels for tactical decisions. Short-term support looks pretty critical right around 3,2076. That's the first line in the sand. If the price breaks below that convincingly on decent volume,
Then a deeper correction might be on the cards.
yeah, that would increase the risk significantly. Below that, the next major support area, probably aligning with the longer-term moving average, looks to be around 3,002. That's a more significant psychological level, too.
And on the upside, if it holds support,
On the upside, it faces resistance, basically, where sellers previously showed up in the zone between roughly 3,500 and 3,600. To break through that, you'd really want to see a strong push, ideally accompanied by a big increase in volume.
okay, so let's try and synthesize this. We've got these incredibly strong fundamentals, record earnings, massive strategic vision, contracted with this technical picture of consolidation, weakening momentum, lower highs, low volume. What's the narrative here?
If you step back and try to connect it all, it really does feel like a classic market wait-and-watch phase. Investors have clearly seen and digested the amazing news, the profit surge, the huge unified 5,000 crore strategic bet. Now perhaps they're waiting for maybe more clarity on funding the CAPEX, waiting for early signs of execution on these massive new projects like BSS.
So the technical weakness is more tactical hesitation than a fundamental reassessment.
That's how it appears right now, yeah. Tactical, not structural damage yet. So a short-term bounce, entirely possible, especially if that 3 to 2 euro 76 support holds and the RSI maybe ticks up from these low levels. But the real confirmation that the market's ready to embrace the next leg of growth that requires breaking that 3,500 near the 3,600 resistance zone, and importantly, seeing volume pick up to confirm the buying conviction.
And it's worth noting the company itself isn't blinking, right? They reaffirmed their outlook.
Exactly. That's a key point. Amidst all this chart consolidation, the company reaffirmed its full-year guidance for FY26. They still expect EBITDA to be in the range of 5,500 crore to 6,000 crore. That's management saying, look, regardless of the stock's day-to-day chop, our underlying business is on track for a very strong year. It reinforces that fundamental picture.
Okay, so let's wrap this up. What are the core takeaways for you, our listener? It's pretty clear. WAAREE Energies delivered an absolutely stunning Q2 FY26. PAT up 134% year-on-year. Huge global order book. Check. Simultaneously, they're embarking on this incredibly ambitious transformation, pouring potentially over 25,000 crore into becoming a full-spectrum green energy provider, BESS, green hydrogen, the works. Check. But right now, the stock market is viewing this through a lens of, let's call it, technical caution. We're seeing price consolidation, those lower highs, weakening momentum indicators like the RSI, and importantly, lower trading volume. A classic waiting game.
And that brings us neatly to the final provocative thought we wanted to leave you with. It connects that huge strategic expansion directly to the long-term risk profile. Because the numbers are amazing, yes, but the execution challenge ahead is just monumental.
Explain that connection.
Okay, so they've planned over 25,000 crore in total CAPEX. They just approved over 8,000 crore, specifically for BSS, electrolyzers, and inverters. Now, compare that to their balance sheet. As of the end of H1 FY26, their total liabilities stood at about 24,625 crore. So this planned new investment is roughly equal to, or even exceeds, their entire existing liability base.
Wow, that puts the scale into perspective.
It really does. So the big long-term question isn't really if the demand for green energy is coming. All projections show it is, astronomically. The real question is how efficiently and how quickly can WAAREE execute on deploying this enormous amount of capital? Can they integrate all these new complex businesses, building transformers, hydrogen plants, massive battery systems across this subtly diversified portfolio? And crucially, can they do it while maintaining anything close to that incredible 25.2% EBITDA margin they just posted?
That's the multi-billion-dollar question, isn't it? The ultimate test of execution at scale.
Exactly. That integration, that operational excellence across vastly different verticals, that's what will separate the eventual global leaders from the ambitious contenders.
Definitely something that demands very close watching over the next few years, not just quarters. Okay, that's it for this deep dive. Thanks for tuning in.
We'll talk to you next time.